So from my perspective, if we take away the fact that prices just pop that on the side, we have seen an incredibly large amount of demand at 90K plus. That statistic alone should have everybody super pulled up, because that to me is the signal. That is the thing that just stands out to me and go, wow, that.
Can you maybe say what are the key price levels that you are looking at, and what would you want to see Bitcoin do over the next couple of days and maybe weeks?
Meet James Chek, better known as Checkmatey on X.
As one of the world's top Bitcoin on-chain analysts and the former lead at the renowned Glassnode, James has now launched his own brand, Chek on Chain.
His mission? To educate investors on Bitcoin's market dynamics through insightful analysis and engaging content.
So that zone is really, you would expect serious support to come in. If the bulls can't show serious demand there, then we probably do have a problem. Now, if things do get really bearish, there's a model I use called the... Now, I've got a working thesis, hasn't been tested and proven yet, but it's a working thesis that that's probably going to be in and around wherever the bear market floor is found. It's hard to construct a case just yet. It might happen, but it's hard for me to construct a case where I think the momentum from the monthly has gone into that Wall Street cheat sheet, because strangely enough, most people in this industry actually want to find out something about Bitcoin, because I think the signal is in that BlackRock has not filed for any other ETP products. There's your signal.
Hey guys, welcome back to Less Noise, More Signal. Well, today we have a guest that we already had on the show. It was like 25 episodes ago or something. It's James from On-Chain, Chek on Chain, exactly. And it's great to have you back. I wanted to get you back on the show just because sort of this emergency episode that I wanted to do, because Bitcoin was sort of tossed around by the markets recently, and I was looking around who could provide some signal here, and that's where I ended up, usually with you. So great that you agreed to come on, and it's good to have you back.
Thanks, mate. Thanks for having me on. It's been a wild couple of days in Bitcoin markets, but strangely nothing outside the normal. It doesn't feel that way in the heat of the moment. It's not all that different to any other previous correction.
Okay, interesting. Yeah, because like it's every time it's like that, Bitcoin corrects, and then I have my friends calling me up, and then my parents even this time, because they're sort of now also invested, and that is like, okay, what's happening here, even though my dad, he's been invested for quite some time, so he's sort of calm, but you have like other people around you, and then
it's the guy that you finally just convinced to buy Bitcoin. He's the one that you're like, oh no, I don't want this phone call. I know he's gonna be pissed.
Yeah, no, but it's actually cool. My dad, he's been to some of the conferences, and he's pretty steady, I would say, and staunch. So that's kind of cool. But some other people that contacted me, and I was like, okay, yeah, what's been happening here? And because the interesting thing is really for me, when the Bybit hack situation happened, like obviously it was Ether that got hacked, but then still it was like the biggest hack in the history of crypto, so to say, and what's interesting, like 8 days ago, I looked up the price for Bitcoin. We were still at 99.4K or something. So quite everything was okay. And now, like 8 days later, we went into the gutter, so to say, And so I was wondering, is there any sort of connection here? Is there any on-chain evidence supporting this, that the Bybit hack could have been the thing drawing down the market, or was it just growth fears and tariff fears? Or what is sort of your analysis say here?
Yeah, I mean, look, my general view is that this was being baked in the cake for 3 months. And what do I mean by that? We've seen an extraordinary amount of sell side by existing holders. It has been just a non-stop 40 to 10, like between 10 and 40,000 Bitcoin from long-term holders every single day, just being deposited up here at these higher prices. Now, that's not necessarily bearish by itself, right? It sounds horrible that you've got this sell side, but in my view, this is demand, right? When someone sells, someone else is buying. So what's happened is we've had a huge transfer of ownership. Bitcoin does this very strange thing where it gets a whole bunch of new buyers in. They usually come in at some kind of price level, and then it says, how much do you really want to hold this thing? And it just goes lower, and it scares all the people who do not want to see the end of the movie. So My personal view is that I don't think Bybit had much to do with it. I don't think all these things, generally speaking, the market has already baked the cake. And the final cherry on top that just puts these events into context, it's usually a headline. It's usually some news story. It's some narrative that people go, oh, it was this, but it wasn't that. In many ways, the 3 months that we had of massive sell side, the market's testing these people's resolve, right? I just think it's really that simple. It remains to be seen whether this goes into some kind of nastier bear market. I certainly sit on the side where I don't think that's what's going to happen. We'll see how it plays out, but I think we're still going to be in a constructive market. The correction so far actually doesn't look that different to just about any other correction you would see. So far, there's nothing that's like completely outside the norm. We'll see how it plays out over time, right? No one can kind of predict where this goes from here or how long it takes. But my general basis right now is that I'm fairly sanguine about the whole thing.
Okay, I see. Yeah, when you say sort of like sell side pressure, and it's been quite big over the past few months, so to say. Can you sort of pin down where this sell side pressure came from? Was it sort of like already sort of the long term holders, or was it like the long term holders, the shortest holders among the long term holders, or was it short term holders after all? So maybe you can shed some light there.
Yes. So I think the easiest way to explain this, of all of the coins that have been spent and moved up to our current price range, 70% of them came from that sideways choppy period in 2024, 30% came from below it. That's the easiest way to just frame this up. We've basically got that split. Some people love to get into semantics about what is and isn't a long-term holder. Oh, they haven't been through enough cycles for me to care. It doesn't matter. It's completely irrelevant. 70% of the coins came from the chop consolidation range and 30% from below. So however you want to classify those, whatever name you want to call them, if you want to call them elephants, you want to call them dogs, don't mind. That is where the coins have come from. So from my view, there's kind of two buckets. The 30%, they're the people who always sell in bulls, right? They've held their coins for however many years and they're taking some chips off the table. The 70%, they're locking in, what was the price? 50K, 60K, 70K. They're locking in a 30, 40, 50% rally. That looks a lot like, you can call them traders, you can call them swing traders, whatever you want. Hedge funds, right? Money managers, someone who's quite happy to take a 50%. It might be 10% of their allocation. They got a 50% gain. Bang. I'm going to stick that in the bank and show my investors so they keep their money with me. That's what a lot of I think this stuff is. And they will just as happily jump back in when the price is right. So as the market comes back down, if they are those swing traders, they're going to be buyers on the flip side of it. Now the market's corrected. They're now getting back in at a price not too different to when they first did. So, these are all the mechanics. Lots of people go looking for who the boogeyman is. In my view, one sold Bitcoin is one sold Bitcoin. And in this particular instance, a lot of the coins came from 50K to 100K. That requires double the amount of capital to come in. So from my perspective, if we take away the fact that price is down, just pop that on the side, we have seen an incredibly large amount of demand at 90K plus. That statistic alone should have everybody super bulled up, because we have seen serious money come in and say, I'm actually quite happy to buy Bitcoin, 90K, 95, 100K. That to me is the signal. That is the thing that just stands out to me and go, wow, that much demand, $400 billion worth of capital has come into Bitcoin over the last 6 months. It's astounding. The numbers are massive. I'm super bulled up as a result, full well knowing it's going to take some time for the market to sort out whatever this correction is, but it always does.
I see. Yeah, very interesting. That's also what kind of intrigues me, as you say, like the sort of, high demand that we're still seeing up here. And obviously, Bitcoin has become a different beast, sort of, because I think, as I told you already, I work at this bank, and you nowadays see it, now that the sort of Bitcoin corrected below 80K. And there were actually some people hitting us up, that would have never thought about Bitcoin. They wouldn't have cared. And this time they were like, okay, this is maybe now my opportunity as well. So there's still sort of a lot of capital on the sideline who's been watching this thing for quite some time, and they now kind of feel honored to step in, because it's like the best.
Yeah, the other thing I think is really funny is that Bitcoin has been headline number forever the most volatile thing of all time, dangerous, warning, caution tape, right? This has been the default. And then Bitcoin sells off in a correction that, from my look, for the way that I look at the market, it looks like just about any other correction in any other bull market ever. It really doesn't look any different to anything else. So you've got a very normal, stock standard, cookie cutter looking correction. And of course, all of these people show up and be like, look at this chaos. Bitcoin's dead. It's over. How is it storing value? And it's like, guys, nobody who buys this thing isn't aware that it's volatile. Not a single person who owns Bitcoin has not heard the story it's too volatile. There's not a single human being alive who owns it that thinks that. And that's just how I think about these kind of markets. Like, it's amazing watching people's narrative. And then you look at what the damage actually is, and you're like, is everyone really that panicked about this? Surprise, Bitcoin goes down sometimes, right? It's been going up pretty much nonstop for almost 2 years now.
Yeah, very true. Yeah. So one thing I'm curious is, like, sort of, you said it yourself, like the market needs time to digest that move. It's not probably going to be this V-shaped recovery, or at least it hasn't been for the past like 48 hours, I'd say. I think we moved up a little already. I think being at
We got to 78 and we got up to 85, I think, today. All right, coming around 84 at the moment.
exactly. And so my question will kind of be, because sort of these technicals sort of still matters, and sort of what type of range Bitcoin sort of ranges, and where it gets sort of rejected then when it's moving up, and where it finds support. So can you maybe say what are the key price levels that you are looking at, and what would you want to see Bitcoin do over the next couple of days and maybe weeks, just to sort of reassure that the bullish psychology is still in play?
Yeah, so the reason that I come to the conclusion on the bullish psychology actually isn't based on technicals at all. What I base it on is unrealized loss. So when we look at the supply, I mentioned that there's a lot of coins that were accumulated 90K plus, and that's absolutely true. But the percent difference between 90K or 95 and 75, which is the top of the chop consolidation range, it's just not that big. It's like, what, 20%, 25, depending on where you want to measure it. It's just not a large range. And most of the coins were not bought at 108, right? So a lot of people love to measure from the all-time high and say, oh, look, it's down 35%. It's like, yeah, but how many people actually own coins from up there? Because at the end of the day, human beings respond to their incentive. If they're underwater and that loss gets bigger and bigger and bigger, they start to capitulate. They start to go, I can't do this anymore. I'm out. So the human psychology element is based on how bad is the delta. So if we measure that delta, and I've modeled it, take the price down to 75K, it's just not that bad. It's like 7% of the Bitcoin market cap is an unrealized loss. In 2017, we recovered from 8% unrealized loss all the time. We did it multiple times in 2020. We've done it multiple times in 2024 and 5. So it's one of those things where, like, I don't think the damage is going to be so bad that it shatters the confidence of bulls. That's my current theory about for now.
Well, but maybe the question I'm having there, because sort of I see that point, because yeah, it's true. The losses are maybe not as hard and not as sort of hard hitting as hard on people. But then the question that I'm also having is sort of, doesn't this maybe also mirror some sort of complacency among Bitcoin holders? Because, like, at least when you not look at it from an on-chain dynamic, but sort of just being on X and talking to other Bitcoiners, like the job consolidation that we had in the last few weeks before this sort of range broke down, it really felt like a lot of people were also complacent in the sort of, it's just going to be, Bitcoin is not going to move lower. It won't move into the 70s, not into the 60s for sure. And it felt a lot of people were complacent, and I'm reminded of this chart that some people sometimes show, this market psychology chart, where
The Wall Street chart, right?
yeah, and then you see the complacent, and this could sort of drag us lower at some point. Obviously, nobody knows, but it's just kind of felt that we are in this stage. And I was wondering, I mean, that would sort of be the negative view then, that because we're complacent, we are yet to go lower. But who knows? Maybe we're not.
So the way I would think about that Wall Street cheat sheet, right? Most people look at it on like the full scale boom bust top to bottom cycle.
This show is brought to you by Newhedge. In a market driven by complexity, insight is everything. Newhedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, Newhedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, Newhedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL.
That happens on every micro time frame too. That's happening on the hourly chart right now. Right now, there's a bunch of guys on this bounce higher who are getting really complacent, thinking that that's it, the bottom's in, and they're about to get liquidated. By the time this podcast comes out, there'll be millions of dollars of people who've lost their shirt because of exactly what you just described. So it's a fractal, right? Market pricing is a fractal. So I often talk about the fact that right now, in my big picture assessment, let's start big and go small. We are in a monthly, long-term, 2.5 year long bull market since FTX blew up. A monthly scale uptrend. That's the dominant characteristic. My base case is until that monthly chart turns around, we're probably going to go higher. But another thing to remember is that the monthly chart, when the bull market peaks, it's going to start on the 1 second chart. And that's going to get worse and worse and will propagate to the 1 hour chart. And then the 1 hour chart will affect the 4 hour and then the daily and then the weekly and then the monthly. So the monthly chart will turn around very, very slowly. So if you're waiting for your monthly chart to turn around, you'll be cut in half by the time you realize it's a bear market. But at the same time, we then have to kind of zoom in and say, well, what's the weekly chart doing? What's the daily chart doing? On a lot of those things, for me, it's hard to construct a case just yet. It might happen, but it's hard for me to construct a case where I think the momentum from the monthly has gone into that Wall Street cheat sheet. Because if I think back to and try and like piece together the narratives at 100K for Bitcoin, and I think we have to separate Bitcoin and crypto because they are actually two different worlds now, in my opinion. If we just look at the Bitcoin world, most of the narrative was people moaning about why it wasn't going higher because of price suppression, which is exactly what we saw in the chopsolidation period. That's boredom. That's just people being bored out of their minds by sideways price action. Now, as I said, there was a lot of sell side, but that sell side is demand. It is demonstrating the other side of demand, equal and opposite forces. And you look at some of the people who have been buying. There's the Tudor Jones and like some of these smartest investors in the world are putting an allocation into Bitcoin. They're putting tiny portfolio chunks in there. So when I look at the whole thing, I'm like, look, yes, we're at a lower price, but after the initial red shockwave, once we got to 80,000, I was like, oh man, now I'm like, okay, which bank account have I not drained yet? I'm like, I need to start finding some cash. So that's where my mind immediately went to. So, and again, I can't tell if I can pick bottoms. I can't pick tops. I'm not going to pretend that anybody knows the exact levels, but I do use my own, because I spend so much time in the data and the charts. I trust my gut. I trust my instinct a lot because my instinct has dealt with all the charts and data I deal with daily. And your subconscious, as everyone knows, does a whole lot of processing in the background. So when my subconscious allowed me to be like, you know what, I'm actually kind of sanguine about this. And it also wasn't hard to kind of imagine that this scenario could play out. I've been talking about it since late December. So it's one of those things, I don't think it was a hard thing to see. And therefore, I'm just one guy. There's no chance in the world that I'm the only person who is saying, I think it might get down into that air pocket. There's a whole bunch of sophisticated investors out there who had this as a decent probability. You know, I'm not the only one to see this. So therefore, I think this is one of those things that people are just going to step in and use as an opportunity.
Yeah, I see. Yeah. I just want to throw in one more psychological observation that I had, talking to some other friends who've been in Bitcoin even longer than me. And they're still, to this day, they're quite well stacked, and so the thing is that they were sort of, when I was talking to them, when it was going below 80K, they were still not, okay, this is not the price that I'm going to reload just yet, because I still do have enough Bitcoin. And always say, you never will have enough Bitcoin. But then there's like, okay, but I can sort of afford for it to still go lower and I can wait, and that's what's interesting to me, that they were like, would it ever go below 70K, into the 60s, then that's where I will come in again. And so you have all these different types of investors and sort of people who are waiting on the line, and they have their different sort of time when they will move into the market. But I've just found this interesting as well.
And something else that's going to happen there, and again, all these things this is why markets are fractals. There's going to be a chunk of them where we've hit 80 for round numbers. We've bounced to 85. Imagine you wake up tomorrow and we're at 90. How many of those guys are going to go, I missed it, I got to get in, and they're going to buy 90 and it's going to go back down to 82, right? That's just how these things work, to be that final puke out. It's going to be one of those. That's why I say it's going to be a process. Yeah, the market's obviously got to climb higher. Whether it's going to chop around sideways, right? We've had some similar examples to this in the past. I think it was August 2020. So this is like just after Michael Saylor bought his first coins. We've had COVID. We're recovering, but we haven't kicked up to 20,000 yet. We had this like Bart Simpson looking pattern, and then it went sideways for a while, and then up it went. August 2023, we had almost the same thing. We've recovered from FTX. We had this up Bart Simpson, down, and then it rallied. So we've had examples in the past like this, where it's been this like Bart Simpson pattern sideways up. That took a couple of months, both of those, to resolve. We've also had 2017 style corrections where it's like a waterfall that we've just had, and it's just a V bottom straight higher, right? So I can imagine another scenario where we just go straight down. Maybe we do get into the 70s, and that thing is like touching a hot stove very quickly. Hands got to come straight back, and it just slingshots right back into space. I can see both of these scenarios playing out. Look, it could also just turn to a horrible lower high, and then we go into a bear market. That can also happen. That's my lower bound scenario. But we just track these things as it happens.
Yes, interesting. Yeah, but then maybe coming back to concrete price levels, because that's obviously something that people usually want to hear. So what are the price levels that you're looking at, maybe on the lower bound, that you would, if it were to stay below these price levels, that would have you worried? And then also measure up at the upper bound, like, so where is it more constructive, so to say?
Yeah, so on the upside, on the constructive side, it's anybody's guess. Traders can work out those levels. The higher it goes, the better it goes, is kind of the simple framework there. So on the downside, because to me, that's where it's more interesting, because if you go towards price discovery, basically, if we get back above 100 or back above 90, I would say, you're then up into where the supply has been accumulated previously. You're breaking through resistance. You're not getting people selling at their cost basis and getting out. And we'll probably get some of that. But, on the upside, get above 90 and it's probably smooth sailing. On the downside, the 200-day moving average is just a really simple, obvious level, right? I think that's like 80K, something like that. That's the most obvious level. The next zone below that, 75, 73, that zone, which I don't know what you would call it, the top of the chop, that would be a 61% correction on the Fibonacci level. So that's usually, if a level comes down and tests the 61.8 and holds, that's usually just fine. It does not uncommon in bull markets for the 61.8 to form that last line of resistance. If we close below there for a couple of days, that's probably not great. Because that's really showing like where's the demand at 75. There should be a very, very formidable defense at 75 in my view. So if we don't get that, that's a piece of information. I think we would. We've already had a decent bounce from 80K, the 200-day. So that zone is really, you would expect serious support to come in. If the bulls can't show serious demand there, then we probably do have a problem. Now, if things do get really bearish, there's a model that I use called the true market mean, which is basically a better version of the realized price, in my opinion. It's the average cost basis for active investors. It gets rid of lost coins, gets rid of Satoshi, old miners, all that kind of stuff. And it's a level that tries to model the average active investor's cost base. Now, I've got a working thesis, hasn't been tested and proven yet, but it's a working thesis that that's probably going to be in and around wherever the bear market floor is found. So if we think about what that looks like, I'm of the view that Bitcoin belongs above $1 trillion as a market cap. I think we proved that last year. We spent 8 months above it. We belong above $1 trillion. So that means we belong above 50K, just kind of base level. If that assumption is not wrong, we belong above 50K. If someone can make me a case for why Bitcoin is worse than it was at $2 trillion, then I'd love to hear it. But to me, it's $1 trillion asset. So 50K is like, I won't have furniture if that happened. I will sell everything in my house. I will sell everything that I do.
Sell your kidney, as Mike Cleary said.
Everything. It's finished, cleared out. So that's what happens at 50K. At 65K, what's the difference between 65 and 50 for a Bitcoiner right now? Nothing, right? So it's the exact same thing. That's Michael Saylor's cost basis. So that's the level of like, if I actually wanted to see something, I want that level. I want 65. Not that I think it's going to happen. I think it's a low probability, single digit percentage. If it happens, I
Mm.
want to watch the movie. I want to see what the market does when Saylor's at his cost basis after all of this buying. That would be so brutal. I kind of want to see it. I want to just watch the movie because that's how we will form the most insane support level there. And every TradFi guy in the world is going to say Bitcoin and MicroStrategy are dead. And what comes next is going to leave them in the dust. If that happens, the price level we go to, that's a bear market. That is, in my opinion, what a bear market looks like. We're at 80, and I'm saying that a bear market goes to 65. Most holders should be saying, is that all you got? Like, where's your 80%, right? So to me, it's just really hard for me to be like, yeah, Bitcoin's dead. I'll see you in 4 years' time. I just can't get there. I cannot construct a case that I believe that gets me to that level. So I'm like, if my true downside is 65 or 70, make my decisions accordingly. And the way that I think about it, for me personally, I bought a bunch of 80K. I think it was 78. I bought a bunch of 80K and I was like, there's two ways I think about this. If we go down to 70, I buy at 80, goes down to 70, will I be mad at myself? Not really, because I'll probably buy there as well. If we go to 80 and then we go to 120, would I be mad that I didn't buy at 80? Absolutely. I'd be absolutely so cranky at myself. So eventually I was like, that's it. That's my level. That's how I know internally and instinctively that's the level where I'm very happy to stack. So anything in the mid 80Ks, I'm very happy.
Mm-hmm. Yeah, it's very interesting observation with Saylor and his cost basis as well. I mean, it's just interesting because a lot of people were pointing to this Forbes magazine cover that he was on a couple of weeks ago, and saying, okay, this is top signal again, and then obviously now people are calling for his cost basis, and once it's reached, they're like, okay, my Saylor is going to blow up and stuff. And obviously they just probably don't understand the entire situation that it's
And you know what else that reminds me of? In every bear market, when the average dude comes to some conclusion that we're going to 10K, we're going to 1K, I'll see you at 12K. Everyone coalesces around this price, right? Saylor's going to get liquidated. When everybody coalesces and they're like, this is where we're going,
yeah,
it's going up.
Yeah, then we're going up. Yeah.
Yeah.
Yeah. Now that you say about coalescing around the price, because one thing, the last thing I wanted to ask you on price is this 69, I think, 0.420 something level. I see a lot of posts, with this 69 something bidding for the culture. I mean, it's this number, this magical number in Bitcoin. I was never really sure why it is a magical number. Was it just like the top in 2021, or why is it the 69420 is some magical number? Do you have any?
I do, but I think it's something that it's very worth just jumping on the internet and just Googling, split it up. Look, 69.
Then get it. Okay, that's what I think was thinking of. Maybe
It is literally that dumb.
it's literally that dumb. Okay, I see. I was wondering, like, guys, what's happening here? But then yeah, good. That dude.
There was no relevance. Although, you know what? It probably wouldn't have been too far away from there would be an exchange out there where the November 2021, it probably would have hit something pretty damn close to that. So, it's not far.
Okay, I see. Yeah, that's like the uncensored version, and the other one would be the censored version. Actually.
Correct.
Okay, I get it. Okay. Well, great. No, I mean, one thing that I wanted to ask you in terms of like what's floating around, an idea that's floating around as well on X is like people are, okay, we've seen this coming also because of macro liquidity. We've seen these charts floating around, Bitcoin lagging the global liquidity. And now obviously it's come down as should have been expected. And now because liquidity has already moved up again, they're saying all the people are like, yeah, Bitcoin has to go up again, according to this metric. So I was just wondering, what do you think of this? And have you done any analysis on the liquidity, why it's lagging 8 to 12 weeks? Is this just like random, or what is it?
Look, I've done no work on it. I know that Lynn and Sam did a fantastic report where they got like 80% of Bitcoin's movements can be explained by liquidity or correlated to it. 20% of the time, it just does its own thing. It gets ETFs or whatever it is. FTX blows up. So it doesn't always move with liquidity, but whenever I see those charts, the main thing, if I could just like offer out a suggestion to folks, if the liquidity goes up like this, doesn't mean the Bitcoin's going to go up like this. They're not like one-to-one things. Show me a 90-day moving average of this stuff. Because the problem is all these like global liquidity charts, like the DXY is doing this. DXY affects everyone else's balance sheet. And it's like people don't look at the DXY and be like, oh no, 107. Oh no, 107. Like they're not like trading on this, right? These are bro things. Give me a 90-day moving average. If they're pointing up over the last 90 days, yeah, okay, we're probably going to head higher. But like looking at it by tick, I think people are just looking for they're looking for a reason to explain this shit. And for the most part, I think it's just much slower. Yes, it's very, very correlated, but stick some moving averages on it, folks, because otherwise it's just, it's just horse trading.
Mm. Yeah, I was always wondering myself, sort of how much is it a forward-looking indicator, like these entire liquidity data stuff, that you're seeing? Because usually once you look at it, it's already in the data, and I guess the market has probably already priced
Yeah, and
such
there's
thing.
never one metric that just like there's no like push this button, Bitcoin go up. It just doesn't work that way.
Yeah, it's maybe one thing that you can have as a macro overlay, but then
Correct.
there's a lot of other things that you have to factor
Absolutely.
into your equation. Yeah. Well, I mean, I guess we're almost at the end. I just wanted to this one last question, because you brought it up yourself, and it's something that I'm contacted also on quite frequently. The Bitcoin versus digital assets, because I think I've gone through a similar journey as you. I've always was mostly interested in Bitcoin. I was looking at other things, but just like recently for the past 12 months, like, or even longer, with Ethereum moving to proof of stake and all these other things, like it's reality that at some point tells you, well, the other things are just not worth it, and spending your time on, and even most of your money on in the end, and that's what you can see. Like most people who are talking altcoins and stuff, when you look at their portfolio, it's mostly in Bitcoin. So maybe if you can just summarize your stance there again for people, why do you say Bitcoin and digital assets? It's just a different ball game. So that would be interesting. Yeah.
For sure. Yeah, I mean, I made a very conscious decision at a personal level than at a business level, 2 points in my life. In 2019, I was really going down the rabbit hole, properly learning about Bitcoin, understanding the self-sovereignty, blah, blah, blah. Austrian economics, all that stuff. And Bitcoin clicked for me. And I understood, okay, this thing makes sense. Now, at that time, I still held a bunch of, I think it was mostly Ethereum, but various other stuff. And, DeFi Summer comes along and I'm playing around with it and seeing how it works. And I held all those things through most of 2022 or 3. I think it would have been 2022 because I sold all my Ethereum very soon after the merge, 0.08 BTC. That was my level. And this wasn't because of any other reason that I just realized a few things. First, when I was really honest with myself and I looked at how and why I used DeFi or Compound or Uniswap or lending markets or whatever it was. When I was really honest, what did I use it for? I used it to get cheap leverage to speculate on more shitcoins. That's kind of what I did, right? I'd take my ETH, put it in a vault, borrow money, buy more ETH, put it back in the vault, let price go up, liquidate the debt, right? That's the playbook. And the more I looked at this thing, the more I realized I actually don't need any of this stuff. Like in my life, I don't need any of this stuff. So, and around 2020, I made a decision that Bitcoin was actually what I found intellectually the most interesting, but I still had a position in crypto world and I still watch it and I still monitor it. And I'm always interested in the narratives that float around because as a social and technological experiment, I still find it interesting to just like see what's happening over the fence. I find that part of the puzzle quite interesting. But Bitcoin is just orders of magnitude more interesting. And in terms of my confidence that it's going to actually achieve its result, Bitcoin does exactly what I need it to do. It doesn't need to change. I want it to change in the sense of making sure we're keeping it up to date and bugs and all that kind of stuff. And, there's various soft forks and things I'd be a proponent for. But generally speaking, Bitcoin does exactly what it needs to do. And if it didn't change, it's probably going to be just fine. Everything else, I just can't help but see where does the demand come from long term? Because if I try to value these things based on gas fees and I look at how much gas I consumed versus how much ETH I held, it's not a good picture. I held fractions of a single digit percentage of my holdings have I ever spent on gas. So that's not good. And then they go, okay, well, just expand and do L2s or do this other stuff. It's like, well, they also have an incentive to pay the lowest fee. And I run through all these ideas. I'm like, unless you generate a monetary premium, and by the way, when you generate a monetary premium, let's for argument's sake, say ETH goes to $10,000, $100,000 a coin. gas fees are going to be so unbelievably high. It doesn't matter what you do, you will never scale to the point where that is not true at that price. Your users and your apps will leave. So therefore, your growth is capped by that anyway, right? So I just look at this whole thing. I'm like, not only do I not need the products, not only is the design kind of questionable for Ethereum, and it's kind of too decentralized as well, because the main, like if you actually go and shoot Ethereum, if you want to kill Ethereum, just turn off Tether and USDC, because then your whole DeFi ecosystem goes to zero, and then you don't need to buy ETH anyway because it's all dead. Why would you bother? So that's it. You don't need to be this decentralized, which is why Solana did so well. But then once you're doing Solana, just go to Tron because it's like a single server, right? So you just kind of look at these things. You're like, the products aren't useful. We've spent hundreds of billions of dollars in a decade trying to find something useful. We've got lots of solutions looking for a problem. And then you look at Bitcoin, which is exactly what I needed to do. I just needed to not die. That's its job. Be scarce, don't die. That's all I need. And I realize I just don't need any of this other stuff. And then I think about how it captures value, and I'm like, I don't think it does. So eventually I'm like, doesn't really surprise me that Bitcoin dominance keeps going higher, because I think a lot of investors are now looking at the current market caps, 400 billion for ETH, and going, I can't get there. I can't even get to 10% of this with any kind of meaningful model. The altcoin market is trying to justify the price they've already hit. They're already overvalued. And that's what I think it's a really hard pill for people to swallow. And I had a fantastic conversation with one of my clients a couple of weeks back, and he had this great line. He's gone through many of the same calculations that I have, and he came to this great line. And he said, be careful what you wish for, because all these protocols are like, well, what if we turn on the fee switch, right? That's going to give dividends. And it's like, if you turn on that fee switch, people are going to run the numbers and realize you're about 100x overvalued. Don't do it. You actually want the speculative premium of people not knowing, right? So it's a really tough scenario. I mean, it's not like it hasn't been visible for some time. Bitcoin has been banging on this for some time with various degrees of quality in terms of the arguments. I always try to, at the very least, I know I poke fun at altcoins, and it's one of my favorite pastimes on Twitter is trying to poke those bears. But at the same time, it's almost always when I'm poking them, it's usually got some constructive criticism in the background. There's a bit of thought that's gone into it. I don't just shitpost for the sake of it. I do it because I find it intellectually interesting. And I do want to see how people feel about some, when you come across a piece of information that you may not like, sometimes it stings.
Yeah. Well, very constructive and interesting advice. I mean, as you say, you do have Chek on chain for institutions, I guess, right? That's something you launched a couple of.
Yeah, so we've got 3 products. One is the charting website, which is free. So you'll get all your, basically any Bitcoin chart you could possibly want there. We've got a paid newsletter, which is, anyone can access that. It's, it's not an expensive tier, but that's where we do 2 posts a week. And then we have Chek on Chain Orange, which is more institutional focused, but by institution, it's also very much priced for individuals, people who just want to go that extra mile, get a bit more personal time with myself, and get some of my real deep thinking, right? We do a monthly report and a conference call. So there's an interaction there. There's a discussion, but it certainly puts a lot more of my energy into a more compact piece.
Yeah, I see. No, because one thing that now springs to my mind that I still have to ask you, because it's something I'm grappling with as well, working at a bank, and I see so many like institutions who are sort of like, they're obviously in Bitcoin, but then on the side, they're into all these other things as well, and they're like, it's some sort of path dependency, you've started that and then you're like, okay, I have to keep going, I can't just offer Bitcoin, because it's always talked of of being a asset class, and that's why I have to go with these other things. So my question is really, how do you tackle sort of this? Is it going to be that you're saying, okay, focus on Bitcoin, but there's other things which are interesting, like Bitcoin is really developing into its own asset class by having MSTR and these other things on top of Bitcoin, and then if you want to do more, at least do this, or like try to come up and combine Bitcoin with traditional sort of equities and bonds, and you get sort of interesting products out of this? Or what is your advice? Because I guess people sort of ask these questions, especially when they are from the institutional side.
I think the signal is in that BlackRock has not filed for any other ETP products. There's your signal. I don't think Fidelity has either. So basically, they've done Bitcoin, they've done Ethereum. I think they've had some inflows to Ethereum, but it's not even remotely close to a market cap weighted equivalent. I just think they've found there's just not the demand for it. The reason they aren't filing for more, there's a couple of small little providers, but there's always a small provider for anything. The big dogs don't care. So, this is one of those things, the market will work this out. And I said this some time back. I do not believe that, I think I actually wrote a piece when the Ethereum ETFs went live. It was called the flip-flopping, where I went through many of the points I said before. And one of my opening bullet points is, I do not believe that the current market rankings that you see on CoinMarketCap, I do not believe that the last 15 years of them sorting out and saying Bitcoin is uncontested at the top, uncontested, not even close, right? Bitcoin's separated from Ethereum by more than $1 trillion, like 1 point something trillion dollars. That's the delta. It's just not even in the same ballpark. That ranking hasn't been tested to date. Ethereum getting an ETF ain't changing that dynamic. So I don't think there's anything that can possibly happen short of Bitcoin just dying that's going to change the relative balance. So for me personally, I just went all in on Bitcoin. I don't hold anything else. I'm just Bitcoin only. Intellectually, right? What I write about is the Chek on-chain Bitcoin newsletter. We don't write about other shit. I'll occasionally touch on it if it's relevant, right? I wrote an opening paragraph about the Trump token when it went live, and then I went straight into my Bitcoin content because it was part of the context. That's it. That's about as far as I go. So for me personally, it's been a fantastic decision. Strangely enough, most people in this industry actually want to find out something about Bitcoin because it is the heartbeat. If you do have a crypto and digital asset industry long term, I can guarantee you that where go Bitcoin, so go it. There just hasn't been this they've diverged in size where Bitcoin's doing its own thing, but they haven't diverged in the sense that if Bitcoin catches a cold, a lot of these altcoins go to negative prices. So, they're in a real bad shape if Bitcoin's not doing well.
Yeah, very interesting. Very good advice. Obviously something I have to consider as well. And especially the one thing with the BlackRock and Fidelity, going for an ETP or ETF product, actually never dawned on me, but I have to check on this. But
yeah, and to be fair, it's been a while since I checked that as well. Maybe they have issued one for Solana, I don't know. But last I checked, there was a bunch of small issuers that have gone for the Solana ones, and the Grayscale's got a whole bunch of them, but who cares?
Yeah.
The big dogs don't seem to care because I think they know there's just not the demand.
Yeah, nice. Great. Some homework for me to do here, but that's great. Cool. Well, James, thanks a lot for coming on, for agreeing to do this on such short notice. So very nice. And have a good one.
Thank you, mate. It's been a pleasure.
Thank you. Bye.
Cheers.